This video today we're going to discuss making journal entries and posting those entries to the ledger. And here I have for you an example of what a blank journal might look like. And you can buy booklets of these at Staples or somewhere if you were trying to keep a manual accounting system. And you can see there's room for lots of different debits and credits to be placed in here. And so a journal entry might kind of look like this. So if we took, these are the first two entries from the problem that we're going to work. Instead of them just being, when we take a look at the answer key, you'll see they're just kind of on a white background. But if you were doing this by hand, you might be using a paper journal like this, and you'd make an entry, leave a blank, make another entry, and use the date and all of that. Let's take a look at what a piece of ledger paper might look like. When it comes time for us to post from the journal to the ledger, this is kind of what an actual sheet might look like. And once again, you can buy these or you can download templates off the internet. And this is in Microsoft Excel right now. So what we have here is we have a bunch of different transactions, and we're going to first enter these guys into the journal. Okay, so remember, the journal is like a diary. We enter all these transactions in the order that they were incurred. After we've entered all these transactions in, then we'll see the next thing we're going to do is we're going to take these things after we've recorded them in the journal, and we're going to post them to the ledger. And the ledger will allow us to see each individual balance for each account after all these transactions have taken place. Okay, so let's go on over and take a look at what things are going to look like when we finish making all these entries. Okay, guys, so this is what our journal would look like here. Okay, so there's two pages here. Notice this is the first page, and then down below here we have the second page, right? So the first transaction, it said that we transferred cash from a personal bank account to be used for the business in exchange for capital stock for $21,000. Now, we're not using T accounts. At this point, we're just making a journal entry. Remember, the T accounts are just used to help us to analyze a complex transaction and to help understand at first the way that the system of debits and credits work. Well, remember, if it's over to the left, it means it's a debit, and if it's indented to the right, that means that it's a credit. Okay, so notice here in the journal, we have the date, you have the year, the month, and then this is July 1st, July 4th, July 10th, etc. Okay, now this post reference, this is actually going to be left blank all the way until the end when we actually take these and post them to the general ledger. The first step is to record all of the transactions in the order that they occurred. So first thing was we received cash in exchange for stock. Okay, then we paid rent expense with cash. We purchased a truck here. We put $4,000 down on it, and the other $14,000 was an increase in the notes payable. So this is the debit column. This would be the left-hand side of a T account, and the credit column, this would be the right-hand side of the T account. Okay, but like I said, we're not using T accounts. We just know that if it's to the left here, if it's nudged to the left, it means it's a debit, and if it's to the right, it's a credit. Now, all of our debits have to equal all of our credits, right? So 14,000 plus 4,000 is 18,000. In order to make sure that the accounting equation stays in balance, we have to ensure that all of our debits equal all of our credits. Now notice here we have two parts here. We have two credits that together equal the debit. Okay, this is called a compound entry. Now keep in mind we leave this blank at this point, and once we've gone through and we've made all of our entries, feel free if you want to pause the video and take a look at every single journal entry that we've made here. You should be pretty good at knowing how to make these entries at this point. Okay, but we've gone through here as each transaction occurred. We recorded it. We used the proper date. And here we just have this thing split onto two pages just because, in reality, you're going to get to the bottom of a page and you're going to run out of space and you're going to have to go to the next page. Okay, so it's going to be important that we know the page number, because when we post these to the ledger, we need to indicate what journal page it came from. Okay, so page 1 and page 2. Now, once we're completely finished with this, at some point in time, we would determine that it's necessary to post these guys to the ledger, because right now all we have is this is like a diary form, right? Well, we want to be able to look and say, hey, how much cash do we have? What is the amount that we owe people in terms of notes payable? How much equipment do we have? How much supplies do we have? Okay, so the journal does not provide us with that information. It's not structured in a way that is useful if that's what we're looking for. Okay, but this is like I said, like a diary. It's known as the book of original entry. This is where when the transaction first takes place, where it's first recorded, and then from here we would go and take it and post it to the ledger. Let's take a second and see what that would look like. Okay, guys, so now what we have here is our sample ledger. Okay, so notice we have the year, we have the month, and we have the date that the transaction took place. This here in the general ledger, obviously, first off, it's important to notice that we have the name of each of the different accounts, right? So we have a different ledger account for each of these accounts receivable, cash, accounts payable, all the different accounts that we have. They have their own home here in the ledger. Okay, so first at the top we notice it says general ledger. We have the title of the account goes here. Okay, this is the account number. If you look in the problem, it tells us to use these specific account numbers. It says use 11 for cash, use 12 for accounts receivable, 13 for supplies, and so on and so forth. So make sure you put the proper account number here, the account title over here. Up top, it's labeled as the general ledger. So from the journal, we take the date. We take the page of the journal here. This was from the first page of the journal. Okay, so the first thing that happened, remember, was we received $21,000 cash in exchange for stock. Okay, so like I said before, the whole purpose of the ledger is we can see a summary of how all of the transactions affected each individual account. Okay, so if we were to go back up top here, let's go up for a second and look at see cash, 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 cash. There's all sorts of journal entries that have affected cash. Some of them make cash increase like this. Here's an example, rent expense. That was a cash outflow, correct? So we have a lot of different items like this, and this is where we record all those. So here is the addition to cash. Here's the cash outflow for the rent expense. And so when we work our way, notice this column here says balance. So we're keeping tabs of the balance all the way to the bottom. And as of July 31st, we can see that the balance is $17,150. Okay, so this is where we show, based on the journal entry, did the journal entry say we had a debit or a credit? So if it was a debit, it goes in this column. If it's a credit, it goes in this column. So basically all we're doing is taking the information from the journal and putting it here in a second place. Okay, and like I said, this is a running total. In this case, we have more debits than we have credits, so we have a debit balance. That's not always going to be the case though, but as we've spoken before, cash normally has a debit balance, so we would expect for there to be a positive cash balance here. Now keep in mind that after we post these from the journal to the ledger, one of the things that we did was we entered the page of the journal. Another thing we're gonna go back up to the journal. Now we're in the ledger now, but we're going to go back to the journal. Look, this is account 11, right? We're going to go back to the journal. Let's take a look at that $21,000 entry that we made. Okay, notice how we put an 11 here. So what this means is at this point, once we populate this post reference column, that means that we have posted this to the ledger, and this is the ledger account. So anytime you see something with cash, you're going to see an 11 beside it, right? Supplies, for example, was account 13. But we wait to actually write the ledger number beside this until the point in time that we've actually posted it to the ledger. Okay, so this means that it's been posted. Otherwise, we might make a mistake and post it twice. So that's just an indication to us that that work has been done. So the next thing we're going to do, once we've journalized every transaction and we've posted them to the ledger, the next step here, or at least in this example, we're going to go and we're going to take the balances, the ending balances for each of these. For example, cash, $17,150. Accounts receivable, the ending balance is $5,200. We'll work our way down through all of these looking here. Look, notes payable, the ending balance was a credit balance of $14,000. We're going to take all these guys, we're going to take all of these balances and we're going to put them together in what's known as a trial balance. And what this trial balance will tell us is if all of our debits and credits are equal, right? So let's take a look here. All of our debits totaled to $64,500. All of our credit balances total $64,500. So these are the ending balances from each of those ledger accounts, right? We just look at what the total was after all of the transactions were journalized and then posted to the ledger, and we take those ending balances and we plug them in on the sheet. And if all of our debit balances and credit balances are equal, then that's a pretty good indication that we haven't made any obvious mistakes. There's still a potential to have made a mistake and it not be discovered this way, but this is a good start. If your debits and credits don't equal, that you've made a mistake right off the bat. If we wanted to take a look here and notice what the difference between our revenues and expenses are for this month, we just look at our total revenues and we subtract out our total expenses. Okay. The fifth thing here, it asks if there's any reason why this number here might not be equal to net income. And we're going to talk about later, this is an unadjusted trial balance. We'll talk about an adjusted trial balance later. There's some adjustments we need to make to these figures at the end of the accounting period.